Good day, all. Ira Epstein of Linn Associates with your metals market wrap-up, your weekend edition. And this is for Friday the 13th. March 20th, 2020. That isn't good, is it? All right, remember on the weekend edition, we're going to look at a monthly chart and then everything's on the weekly basis. I'm sure you're aware of what's been going on in metal prices. This is today alone, down $73 in the gold market. And the market has just been dumping assets. It's not just gold. Bitcoin, by the way, while it's only down today $680 for a contract, it's lost 40% of its value. Just like that, 43%, I believe it is. So we're watching markets that, well, I was watching people say you got to have asset allocation in gold. When everybody says the same thing, I always get nervous. It's like when you go for a haircut and they're asking you about the market and they're telling you they bought real estate. I remember all that. It's just pay attention. Let the charts do the talking. And as you can see on the monthly chart, I pay attention to what I teach. Generally speaking, markets, 95% of the time, is that general enough for you, will stay within Bollinger Bands. When you get over them, you're getting to something of an extreme, and you've had a pullback. So the pullback this time for the month so far is $50. Okay, it's only a 3% pullback. It's much more painful on a daily basis, but momentum is pointing down. The trend is up because you still have the higher lows, higher highs, and the market has corrected from getting over that upper Bollinger Band. Now, when we go to the weekly chart, a little different story here. On the weekly chart, this is the numbers you don't want to take out. If you do, then you've got to see, do you hold right through here? And that number is called the 18-week moving average of closes. And that's what you basically pulled back to, and you were down 9% for the week. When we come over to the weekly bar chart, you made the highest high, and now you've got this big correction. When we put the swing line on, I'll show you this right through here. Higher lows, you had higher high. And what did you do today? You broke down through that. So you've ended that weekly uptrend that really began back here in the 1450 level. Could retrace there, you don't know. When you take a look at the 18-week average of closes, do you disagree that we've pulled back to that number? And I'm sure up here you'd have thought it would never do that. I don't know. I just know that's the number I don't want to take out. And when it takes it out, the trend is over. That doesn't mean you're bearish. You don't have a pattern of lower highs, lower lows. You have a pattern of a higher high and a lower low. That's no trend at all. When I look at Bollinger Bands, my theory is the market is going, in fact, it's not mine, it's the theory of Bollinger Bands. The market is not going to stay outside of the bands more than 5%. My theories come in how I count consecutive closes on them and what they do from there. Suffice to say, you're out of your uptrend, resistance of the Bollinger Band stopped the rally, and momentum is turned down. So the bias is down since the settlement's under the 18-week. You're not trending because you have now a lower low and a higher high. When we come to the gold-silver ratio, it's just been a run to the upside to the 104 level. This was the battleground. It held and the market took off to the upside. On silver itself, you've gone from the upper band to the lower band, and you haven't had a trend in between. You came down here. By the time you cleared these highs, you still had a higher high, lower low. Market got up there, and in almost 1 week, it went from the high to the low of the Bollinger Band and now back through it. I sit here in amazement sometimes. You know, I watched CNBC just before I did this, and they were asking technicians, and I won't name them. And the question was, have you ever seen volatility like this? And nobody answers the straight question. Well, I was expecting this, that. They haven't seen this kind of volatility. It's taken all of us pros looking at it. This is extreme in every market all the way through. That means you pull back a little. Copper, still very bearish. You still have the lower highs, the lower low now in the market. You're under the 18 8-week average of closes. You hit the lower band. This is where I think pros this week took some money off the table. But you're still down for the week. Nearly 10 cents, 3.5%. And we can go from where you're at back here when you were pushing $3 down to $2.44. You don't need me to do the math. It's pretty big. You've got your 20% decline. In the platinum, you fell apart. Who's manufacturing cars where? Italy's shut down all their manufacturing. China's just at the point where they're going to bring back their manufacturing now as the automakers are just gearing back to normal. And they're doing a good job. They're getting a lot going on in China. But Japan's not doing that. South Korea's had a problem. And now it's coming to the U.S. As I said, they closed all the schools. How long do you think before some factories have to turn off the people? So you get the platinum market, the palladium market, they get hit, and you're getting crazy swings in the dollar index back and forth, and that's to be expected. There's my news again. I forgot that. But you come here, highs and lows, nah. So as somebody that's got a lot of experience, I owned in 1987 in Black Monday. I had my own stock firm and commodity firm. Then I went through the dot-com bubbles, and I go through this. What I learned, I can tell you, there's a time when you put your hands in your pocket. That doesn't mean you stop your trading account or anything. Markets turn on and off very quickly. And this market will discount all this before the end of it. And that's what we're in. You've got this week coming up what? The FOMC meeting. Why would you want to gamble on that? Number two, you got a weekend in front of you where the news is going to be all about COVID-19. Do you think it's going to be good news? If you do, you're very different than I am. I think the news is going to be more cases, more problems, and as much as the president, as much as Congress wants to do, or the Fed, how do you beat a virus? So when you look at these markets and you see this, people run for the hills. So the gold market, that was an asset holding up. Maybe they had bad investments in stocks. Well, the stock market's up 10% today. So what? Bear markets get rallies, and you're in a bear market in stocks until you get one heck of a rally, more than you're getting right now. This is a one-day event so far. I talk about this and a heck of a lot more in my morning subscriber video. Let me explain how this works. I get up 4:30 in the morning and I read like mad. I get my cup of coffee, I sit there and I read, and I don't stop. I have certain papers I'll read out of Asia. I'm reading the news headlines, be it Bloomberg, Reuters. I can go on and on with all the news that I'm reading, our own news wires, what's going on, and I have a pretty good feel then as to where I'm at. I start you off in the morning telling you what the day's economic reports are going to be and what the expectations are out of those reports. Then I bring you in, before we even look at a chart, what's going on, what you should be concerned about. Then I bring up the charts because they've already been open since 5 p.m. in most cases. Remember, Sunday night we reopen at 5, and then we go 23 hours a day in futures until Friday at 4 p.m. It's a long time. So you get a feel for where you're at, and I bring you right into it, and I cover 40 charts for you, all the major commodity sectors with a lot of detail. The idea there is to give you confidence in your own trading. I'm going to tell you what I see. I don't know who you are, but it's as though you're sitting next to me. And I try to answer the questions. I try to cover the markets that I'd want in the way that I'd want as a market technician. If that sounds of interest, just go to our website. It's under www.iraepstein.com research. Charge for it, $7.95 for 30 days. If you decide this fits in with you, you get the next 30 days for $15 and so on, or you can buy a one-year subscription, pay up front at a discount from that $15 of $13 a month, but paid up front. I'm also putting into that my Spider ETF video for a free trial for all of you, and I've done something else now. For those that are my paid subscribers, I put my charting course on sale. So at the end of our subscriber video, you'll see the coupon and all that you need. I think you'll find it interesting. I'm Ira Epstein. You have a great weekend, and I'll see you all come Monday.